Welcome to our channel Management Accounting Made Easy. This is part 4 of relevant costing. This is relevant cost of machinery. We'll see what are the non-relevant costs of machinery, any historical costs. They are the sunk cost, the costs which already have paid for. Depreciation. Depreciation, we all know it's not cash flow. And net book value of machinery, these are all non-relevant costs. Okay, so we're going to see if a company is planning to replace the machinery or if the company is not planning to replace the machinery. So, under these two circumstances, if a company is planning to replace a machinery at the end of its useful life, the relevant cost of that machinery is the current replacement cost. Now, at the end of the life period, or if the machine is idling and the company is not planning to replace it, so we need to take the highest value of either the sale proceeds, if the machinery is being sold, or the net cash inflow from the use of the asset, if the asset is not sold. So we are going to see some examples just to give us a clear idea. We are going to see an example, or example 1, relevant cost of machinery. So we look at this question. High Tech Limited has an idle machine which had cost 75,000 at the time of purchase. So we all know this 75,000 is not a relevant cost because that's a sunk cost which has already been paid. The current book value is 60,000. Again, the book value is not a relevant cost. So the 60,000 is also not relevant. High Tech is planning to undertake a new project for which it can use this machine, but the company has to update it at a cost of £90,000. So this £90,000 is a relevant cost. And the question continues, would be depreciated at a cost of 5,000 per annum. So this depreciation is not a relevant cost. We all know depreciation is not a cash flow, so this 5,000 should be ignored. And it could generate a contribution of 120,000. This 120,000 is a relevant cost. The scrap value of the machine is 82,500. Again, this is also a relevant cost. Now, what is the best possible option for High Tech? So either to dispose the machine or to use the machine in the new project. So now we need to compare. If the company is going to dispose it, the company will get £82,500 as scrap value. And if the company decides to use it in the new contract, the contribution the company is going to earn is 120,000, whereas it has to incur a cost of 90,000 for the update. So the net cash flow for that is 120,000, take away the 90,000. So if you compare both cash flows, the scrap value is 82,500. The net cash flow from using the machine in this new contract will be 30,000, which is 120,000. Take away the 90,000. So when you compare both cash flows, the best option is to dispose the machinery for £82,500. We look at this second example of relevant cost of machinery. High-Tech Limited is currently planning to undertake a new project. It has an idle machine which had cost £17,500 at the time of purchase. Of course, this £17,500 is a sunk cost which is not relevant. The current book value is £11,000. This is not a relevant cost. Depreciated at £2,500 per annum to date. This is also not relevant. So if you look at the question, normally in management accounting, they give us some redundant information. That is, redundant means unwanted information. So if you look at this question, that 17,500, 11,000 and 2,500, these are all non-relevant costs. So we need to ignore that. The current disposal value of the machine is £8,750, which is a relevant cost, and the disposal cost is £750. So if the company is disposing this machine, they will get a net income of £8,000, which is 8,750. Take away the disposal cost of 750, so they will get a net income of £8,000. High-Tech can use this machine in the new project, but it will have a dismantling cost of £550, which is a relevant cost, and a further cost of £900 for refitting. So this is again a relevant cost. Okay. So if the company is going to use this machinery in the new contract, the question is, what is the relevant cost of this machine? So we'll see the relevant cash flow. As I have discussed, 8,750, take away the 750 disposal cost, so the net cost of £8,000, because if the company is going to use the machinery in this new project, the company will lose the scrap value of 8,000 plus the additional costs, the additional dismantling cost of 550, which is 8,550, plus the refitting cost of 900. So the relevant cost of this machine will be £9,450, which is 8,000 plus the 550 plus the 900. We'll see how to calculate the deprival value of a machine. Deprival value is actually the relevant cost of machine. Now, in order to calculate the deprival value, we should know the recoverable amount. Recoverable amount is the highest value out of scrap value and the net cash inflow from the use of the asset. So by comparing the scrap value and the net cash inflow from the use of the asset, we are going to see which figure is going to give the highest value to the company. So you've got to compare the scrap value with the net cash inflow from the use of the asset, and you got to pick the highest value because that's the value is the recoverable amount. Then we got to compare the replacement cost with the recoverable amount, and then we need to pick the lowest out of the two to calculate the deprival value. We are going to see an example after this. Okay, we are going to see how to calculate the deprival value of a machinery. So we'll see this example. A company purchased a machine for £55,000 5 years ago. This is a past cost or sunk cost. So this £55,000 is not a relevant cost. So we can ignore this £55,000. And we are going to continue with the question. It has a scrap value of £30,000, which includes a disposal cost of £4,000. So the net scrap value is £26,000. If kept, the machine is expected to generate a future income of £40,000. The current replacement cost of this machine is £75,000. What is the deprival value of the machine? As we have seen before, the deprival value is the relevant cost of the machine. Now, first we need to calculate the recoverable amount of this machine. So in order to calculate the recoverable amount, we need to compare the scrap value. In this case, it's £26,000 with the future income generated by the machine if kept, which is £40,000. Now, when you compare these two figures, by keeping the machine, the company would generate more income. Therefore, the recoverable amount of this machine is £40,000. That is the highest value out of the scrap value and the net cash inflow of the machine by keeping this machinery. Okay. Now we know the recoverable amount is 40,000. The replacement cost is 75,000. So when you compare the recoverable amount with the replacement cost, the lowest value is the recoverable amount. So the deprival value of this machine is £40,000. We are going to see another example on relevant cost of machinery. So we'll see this example. XY Limited has an idle machinery. The scrap value of the machine is £4,500. The company could use this machinery on a short-term special order. Variable running cost will be £750. On completion of the special order, the machine will have no resale value and the company will incur an additional removal cost of £820. Calculate the total relevant cost of using this machine in this special order. Okay, now if you see the scrap value, if you use this machine for this special order, the company is going to lose the scrap value from the machinery. So the scrap value lost by using the machine in the special order, this is an opportunity cost. So the opportunity cost is the scrap value lost, which is £4,500. Plus, the company is going to incur additional variable running cost of £750 on top, and then the company is going to incur an additional removal cost of £820. So these are all relevant costs for the machinery using in this special order. So the total relevant cost of using this machine, if you add 4,500, which is the scrap value lost, plus the variable running cost of 750, plus the removal cost of 820, so the total relevant cost of running this machine will be £6,070. We'll see another example on relevant cost of machinery. Alpha Limited has purchased a machine 5 years ago at a cost of 45,000. We know that 45,000 is not a relevant cost. Depreciated on a straight line basis at £9,000 per annum. Again, depreciation 9,000 is also not relevant. The machine has a scrap value of £2,750. At present, this machine is not used by Alpha, but the company has been offered a special contract where this machine can be used. If used in the contract, there will be an extra cost of £380 to remodel the machine, and at the end of the contract, Alpha is estimating a scrap value of £1,500 for this machine. What is the relevant cost of this machine? Okay, because they're going to use the machinery in the special contract, the machinery has lost from its scrap value £1,250 because the original scrap value is £2,750. At the end of the contract, the machinery's scrap value is £1,500. So if you take the difference, £1,250, which is 2,750, take away the 1,500, which is 1,250. So that is the scrap value lost, plus the extra cost of £380 to remodel the machine. So therefore, the relevant cost of this machinery is 1,250, which is the scrap value lost, plus the 380. So the relevant cost is £1,630. This is our final example on relevant cost of machinery. Because as I have mentioned before, the more you practice, the better it is. AB Limited has purchased a highly specialized machinery required for a new contract on leasing. Monthly lease payments are 1,250. Okay, as if you refer my previous relevant costing videos, you will know committed costs are not relevant. Even though they're future cash flows, they're not relevant. If you look at these ones, lease payments are not relevant, even though they're future cash flows, because you have already committed. So whether you like it or not, you got to pay. So that 1,250 is not relevant. The cash price of this machinery was £12,000 3 years ago. So again, this 12,000 is not a relevant cost. The machine is expected to lose £750 in its eventual sales value used in this contract. So this is the opportunity cost, the value lost. So if you remember in our previous example, the company lost £1,250 of its scrap value by using the machinery on that particular contract. So that is the opportunity cost. So the same way they say this machine is expected to lose £750 in its eventual sales value used in this contract. So this example, this £750 is the opportunity cost, which is relevant. Also, another machine will have to be hired for 5 months, which is the whole length of the contract. Hire charge for this machine is 100 per month, with a minimum hire charge of 560. Okay, so hire charge is relevant, but in this case, say you're going to hire it for 5 months. So the hire charge per month is £500, but there is a minimum hire charge. So you got to pay 560. So in this case, the hire charge is £560. Now the question is, what is the relevant cost of this machinery for the contract? Okay, so the relevant cost here is the scrap value lost, which is 750, plus the hire charge of 560. So the total 750 plus 560 is £1,310. So let me quickly say why the hire charge is 560, because that's the minimum hire charge. Okay, so if you hire it for 5 months, the hire charge is £500 because 100 per month, but the hiring company says, no, you got to pay me £560. That's the minimum charge. So the relevant cost here is 750 plus 560, which is £1,310. Thank you for watching. If you like this video, please like, share and subscribe. I'll see you with the final part of relevant costing.